Great. So, first of all, thanks everyone for joining us today. And we're here to discuss the kind of most recent crypto ecosystem developments that we feel are really driving the investment case for this asset class going forward. I'm Jerry O'Shea. I'm head of global insights at Hashdex, and I'm joined by our head of research, Pedro LaPenta, and then research analysts Lucas Santana and Yuri Alter as well. So thanks, guys, for being here to discuss this always very relevant, timely topic. And I think before we get started, there are kind of two administrative things I want to raise. The first, importantly, is that this webinar is for educational purposes only, and for any product-specific information, please refer to the appropriate prospectus. And then I also wanted to mention that we will save some time at the end of the call here for questions. So please feel free throughout to submit your questions about really anything at all. We've got a lot of broad expertise here with our research team. So look forward to the questions from those of you that are joining us today. So we're here to talk about our second quarter market pulse. And it's a relatively new initiative we've launched to help keep investors informed of the most impactful developments with Bitcoin, with Ethereum, and of course the broader crypto ecosystem. So while it's kind of a look back over the last quarter and some of the things that even went on in the early part of the year, we do think it provides some very important insights into the rest of 2023 and beyond. So I'll start my first question. I'll start with you, Pedro. I think obviously we had seen this period of pretty low volatility with Bitcoin for a few months, and that all changed last week. So I do want to ask you about that kind of before we get into some of the other developments that took place over the first half of the year. And basically with I guess kind of a very direct question, what happened last week with the sudden drop in the price of Bitcoin?
Yeah, Jerry. Well, thank you all for participating. It's an honor to be here. So let's get started. A bit of a background from where we're coming and where we're going, right? Well, remember 2022, very rough year in risky assets globally. And then crypto wasn't any different. And we put out, a report back in January. We said the outlook was promising, and indeed it was. And we started the year on a positive note in the first quarter, then a little bit more. Then it started with the crisis in the second quarter related to the banks in the US specifically, and in Europe, Credit Suisse and UBS, to name them. Crypto reacted positively. And then in the last, June, late June, early July, things started to calm down in macro as well. And we've seen, a high correlation of crypto prices to macro conditions. And although it's fading away a little bit, but then we saw, a bit of a calm period for crypto prices, which is uncommon, right? Given the characteristics of the asset class. And last week, it wasn't really anything related to crypto specifically, and it was all related, and in our opinion here, to macro, and we put out notes on this. And it was just a combination of factors that mostly macro-driven characteristics. And what really triggered it was on a single day we had a piece of news on the Wall Street Journal speculating that SpaceX, remember by Elon Musk, has been a major crypto backer, and he used his companies to acquire Bitcoin. So Wall Street was speculating that he was selling his Bitcoin. And then on the same day, we saw Evergrande, right, the largest real estate giant, in filing for a Chapter 11, some form of a bankruptcy court in the U.S. Which is quite the news, because it's one of the largest companies in China, and has a lot of debt, and this whole infrastructure real estate thing in China has been a topic of discussion for quite some time, and it's finally showing some cracks. So that helped a lot. And on top of that, a lot of noise from the Chinese central bank, yuan intervention, and also yields in the US peaking at to 15-year highs. So these were all aspects related to macro conditions, right? Nothing related to technology or crypto. It obviously affects in the short term, and this all happened in a window of a single week, and it dropped a little bit. It brought prices down something close to 10%. It reached 25,000, coming from 29-ish, and it's now back in the middle, like 26, 27. It kind of washed away the impacts in a sense. But what we can say, it wasn't really related to anything crypto, right? And we're going to talk about more about this and everything that's going on in the crypto world, which we think is very positive and should help, price performance and adoption and the mood to increase in the coming months. But overall, I mean, it was all macro driven factors that drove prices down, Jerry.
Yeah, so just to ask a follow-up too, is your sense that it was essentially kind of like a perfect storm of these events last week, and we're going to return to the sort of low volatility environment that we've seen, or what do you think we should expect in terms of volatility of the asset class going forward?
Yeah, that's a good question. I think it was just a coincidence of factors happening in one specific week. Crypto has been on this lower volatility trend, as well as somewhat lower volumes overall, right? Which might have had a differentiated impact on prices. But I expect volatility to pick up to more normal levels in the coming months, Jerry, and not in a bad sense, right? Volatility can be up and down, but what we're seeing is that we are entering a new phase in crypto, right? We're what we call this the institutional phase of crypto, and markets, I think, as they investors understand what's going on, and this is our duty here to bring investors worldwide what's happening in the kitchen and what the good things are happening in crypto. And then once investors are aware of what's going on, I think this is going to start reflecting in prices. But overall, we still have a macro background with a bit of a noise, right? We have this whole discussion on the Fed. Is it close to the end of its tightening cycle? Is it not? Is it going to require a little longer of higher rates? Is it going to require a little higher rates? Remember, I don't think we're not even close to what the movement was back in the beginning of the year, where interest rates had to come from none, close to 0 to close to 5% in a very short window, right? We're talking about now marginal movements, 25 days here, longer or shorter, one more hike here and there. So the magnitude of the movement is much different now than it was back then. But we still have this macro condition and playing in the background, right? Some noise, and now with the additional issues coming from China, which is all over the news. But I think this might bring a little bit of volatility, I think. But again, on as I said, bringing to what's happening in the technology and in crypto, crypto is in the middle of a major shift in narrative. I think, right? Well, remember that crypto is initially a retail phenomenon. And as it gets adopted and then people understand the technology and they dig deeper into it, they see that this is something that's here to stay. And we're seeing this with this new phase of institutional adoption that, it's happening everywhere you look. And this was, I can certainly say that, that the most relevant piece of news that we had in terms of institutional adoption was the filing of BlackRock with the SEC in early July, which affected prices, right? And remember, BlackRock is the largest asset manager in the world, super institutional, involved with every single asset class in the world. So it's if a player like with BlackRock is saying, yes, we want to offer this to our clients, and clients are asking us, and we did in fact file for an ETF with the SEC, there's a strong message there. So that's the point that I'm trying to make here, that crypto is shifting crypto is shifting the narratives from a retail-oriented emerging asset class to an institutional, base to asset class to be distributed among every single fund in the world, every single pension fund, every single investors, and this is shown by BlackRock's commitment to the asset class. And you can see that by listening to Larry Fink, the CEO of BlackRock on TV, you would get back to 2-3 years ago, and the comments he made on TV were for us that have been involved with crypto make no sense at all, and then now the narrative is shifting. So I think this is the big message, and it probably will have some impact on volatility, and we think to the upside.
Yeah, I think maybe if we can stay on Bitcoin for a minute, but I actually did we just today, actually, our head of US and Europe wrote an op-ed for Financial Advisor magazine talking about this being the summer of institutional love for Bitcoin in particular, about all of these different, in addition to BlackRock, some of the other things Pedro was talking about, and I'm sure we'll talk about more momentarily. But specific to Bitcoin, Lucas, I mean, obviously even with the sell-off last week, I think Bitcoin's up over 60% year to date. What are kind of the most impactful events, or have been the most impactful events this year in particular, that have impacted Bitcoin's, both its price and its investment thesis?
Yeah, Jerry, good question. It's a pleasure to be here with all of you. I just remind everyone, if you have any questions, feel free to leave them there in the Q&A. And I think to start answering your question, I think one of the things Pedro mentioned, this idea of a continuing institutional adoption for Bitcoin, is perhaps one of the huge events for this year. So this filing for a spot Bitcoin ETF in the US, which in our opinion is still lagging behind in terms of regulated products to give access to the overall digital asset space, as Pedro said, is a huge recognition of the asset class and of Bitcoin in particular as an investable asset that should perhaps in the very near future be in the recommended portfolios of those big asset managers such as BlackRock, such as Fidelity, so on and so forth. So that's one thing. On the first quarter of this year, and we covered this in the first edition of a Market Pulse, we covered the positive reaction of Bitcoin when the Silicon Valley Bank went sort of quote unquote bust in the US in early March. And we saw that Bitcoin responded quite positively to that event. And actually, it responded with a performance that went above all the other larger asset classes, and in particular, other large crypto assets. So beyond Ethereum, beyond other large crypto assets, which in our opinion is one of the reassurances of this thesis, emerging digital store of value thesis for Bitcoin. And well, on top of this, we actually saw some very interesting ecosystem developments in the past quarter. Just to illustrate a few, and I think we also covered this in the first quarter of this year, is this idea of new utility coming to Bitcoin. So I think this slide shows two interesting things that happened in the past quarter. On the left, we have this idea of using the Bitcoin blockchain to issue what we call these digital collectibles, or NFTs. And in this past quarter, so the Q2 of this year, we saw this idea of tokens being issued using this new standard called ordinals and inscriptions on Bitcoin. And the usage and the run for this went sky high. And if you look for the on-chain fees on Bitcoin, in the beginning of May of this year, it actually spiked up to regimes we have only seen in the past in bull runs. So it's quite interesting to see that new utilities coming to the flagship blockchain, and that this is driving demand for block space, and as such, competition for on-chain activity. We have to remember that one of the ways that miners today are paid to register transactions and to mine new blocks on Bitcoin is through transaction fees. And new utility gives more demand for block space on Bitcoin, and this, at the end of the day, drives higher the revenue for miners. And at the end of the day, what this means is that Bitcoin has more incentive for the network to to be very secure. And this is very much connected to one of the things that we've seen since the beginning of April of this year, is that if you look for the hash rate of Bitcoin, so the computational power that is currently being employed by miners to secure the network, and if you compare this to where it was right before the China mining ban in May of 2021, so more than 2 years ago, now we are twice as much secure in terms of hash rate than we were prior to that ban. So essentially, these additional incentives, and you have to remember that Bitcoin is still ways off its prior all-time high, but this idea of a continued increase in the security of the network continues to play out. And in our opinion, I think this is very important for the long-term growth, and actually to people understand that this is the most secure network in the world, and this security is actually really important for the longevity, for the security of one of the most important assets in the crypto asset space, which is Bitcoin. So I think this is two things I'd like to remark for the past quarter. And another thing which I could say perhaps is not really positive is this not so much growth in the Lightning Network liquidity. I also covered this, I think, in the past quarter, this idea of doing cheap and fast payments using BTC. But I think one of the key developments we saw in the past quarter regarding, for instance, Lightning, this scaling solution for Bitcoin, is also traditional institutions or banks starting to write and to do public statements regarding Bitcoin's leading scaling solution. And the example for last quarter was Santander, which released this report talking about Bitcoin scaling solution. And I think it goes very much in the direction of one of the things that we have been saying since the beginning of the year, that it looks like the broadband phase of crypto, and our CIO, Samir Karbaj, wrote about this earlier this year. This broadband phase of crypto is just getting started, and it goes very much in the direction of higher speeds, cheaper transactions, and eventually this will allow millions of new users to come to crypto and start really interacting with blockchain applications. And in the case of Bitcoin, we believe that the Lightning Network will be one of these key technologies. So I would say these are the three highlights for the quarter, and I think it adds on top of what Pedro talked about in the institutional adoption part of it.
Great. I want to move away from Bitcoin just for a bit, because I know it seems, at least this year, that not that Ethereum hasn't always played second fiddle to Bitcoin, but it's felt like with the performance of Bitcoin and kind of its performance through the U.S. banking crisis, it's gotten a lot of attention. But there's also been a lot of developments around Ethereum that Yuri, I was hoping you could maybe shed some light on some of those developments and what we're seeing there.
Certainly, Jerry. Let's try our best to go over the main points for Ethereum last quarter then. Basically, last quarter, we've had one of the most important updates for the Ethereum network with Shanghai update. And I believe that most of the news flow, at least the important parts, they have to revolve in Shanghai, because it's just the most important update that happened. But basically, what we saw, one of the most important things was the staking inflows surpassing the outflows. In the last quarter, we emphasized the importance of monitoring the net balance between either withdrawals and deposits through staking as a critical metric. And well, the Shanghai update was a turning point in that sense, with total staking inflows surpassing outflows in just 3 weeks, which is a very encouraging stat. After its implementation, this rapid shift just demonstrates the strong response from market participants to the update. That's very, very encouraging. Also, much like we've highlighted in our last Q1 market post report, but even more in this last quarter, we witnessed a remarkable surge in the volume of new staking deposits, which kind of makes sense with what I just mentioned, right? Indicating a significant uptick in staking adoption. We remind you, investors, that this is one of the most pivotal metrics to determine the institutional appetite in order to invest and stake Ether in the Beacon chain. This is a great metric to captivate the imagination of the long-term appetite for institutional investors. So very, very, very important. And like I said, like this is this surge is a very positive sign, as the more ether is locked in staking smart contracts, also the more secure the network becomes due to the increased cost of a potential attack to Ethereum network. So very positive. Also, in that sense, maybe a very important milestone that we've reached in this last quarter was the 20 million ETH being staked. In June, we saw this historical moment for the number of ETH being staked in the Beacon chain for the first time, which means that now 1 of every 6 ETH in circulation is staked. This is very, very promising, and something that last quarter we hope to see throughout the last few months. Like I said, also like this reduced liquid supply in the market, and that could potentially mean that if Bitcoin performs the way that we hope in the next upcoming months, it might become a strong driver to push Ether prices even higher as far as the demand goes for Ether. If it continues to grow, if we continue to see this uptick as far as institutional investors, we think that due to this constriction in the liquid circulating supply, this reduced liquid supply might be a factor for ETH to push even higher than what Bitcoin is performing so far. Since not everything is positive, we do have perhaps a negative side also in the news flow, which is the concerns over Lido concentration as far as liquid staking. In our previous report, we expressed concerns, right, about the need for a more diversified, if you will, market of liquid staking providers. And however, you know, instead of having it diminished, the Lido's market share has significantly increased, actually, with over 80% of control. And while it's not inherently a negative aspect per se, it's essential to acknowledge the potential risks associated with a single provider for those derivatives having such a dominant position in the market. Like I said, it's not necessarily a bad thing, but it's a point of concern nonetheless. One other, maybe the final 2 things to address, and what I believe that are not necessarily inherent to Ethereum per se, but alternative investment cases that strengthen Ethereum in an indirect way. If we think about what we call here in hashtags, right, digital culture, we have a very interesting protocol emerging as an alternative to traditional social media. I don't know if institutional investors are familiar with the recent backlash against Elon Musk's Twitter, or X as it's called right now, but it was in midst of such a scenario that Lens, an Aave-backed protocol, raised $15 million in funding. Lens protocol basically aims to establish infrastructure for alternative platforms to potentially challenge not only Twitter, but also Instagram and other social media apps. It's a very interesting and disruptive way to address the matter of IP, intellectual property, being owned not by necessarily the platform, but by the users who are creating the content. And as we all know, this is a very important market in these days. It generates a lot of revenue, a lot of money. And like I said, notable investors include prominent figures such as Hayden Adams, who is the CEO of Uniswap, Balaji, who's the former CTO of Coinbase. So very interesting signs in that regard. And like I said, also it just signals a growing interest in decentralized alternatives instead of the ones that we're currently seeing in the market right now, such as Instagram, Twitter, and all that. Also, I believe that since DeFi has been on the spotlight in the last few weeks for negative reasons, perhaps, we would like to address that we do believe that when we separate noise from signal, the outline as far as hashtag C's is quite encouraging. This last quarter, Uniswap, the leading decentralized exchange in the market, has announced that it will have its V4 iteration. The most recent iteration will roll out this next year. This upgrade is expected to strengthen the DeFi investment case, which is one of the things that here in hashtags we're most bullish on, by reinforcing the protocol's position as the top DEX in trading volumes. We are firm believers that with the newest iteration, the new tools that they have in order to provide a better suite of trading mechanisms, if you will, Uniswap has the potential to surpass perhaps its centralized competitors like Binance, Coinbase, just indicating its increasing dominance in the exchange niche. And maybe just to wrap it up, because I know that there are a lot of things going on with Ethereum, even with Bitcoin perhaps being a little bit more dominant as far as price action goes. A lot of things happening for Ethereum this last quarter. Maybe in conclusion, I would just like to point out that these developments in Ethereum staking, the emergence of alternative platforms, the upgrades, and DeFi protocols like Uniswap, they're all contributing to a dynamic and evolving landscape of crypto and blockchain technology in general. And as institutional investors, I believe that it's crucial to stay informed about these trends as they have the potential to shape the future of finance. Yeah, I think that at least for now, as far as your question goes, that would be all, Jerry.
Awesome. Thanks. And I think I've got a couple more questions, and I see we've got a handful of questions coming in already. So I'll ask those, and then we can shift to the questions from the audience. But Pedro, I did want to get back. I think you touched upon this earlier, but with regards to crypto's performance in the first half of the year, maybe if you could just speak a little bit about kind of its performance relative to other major asset classes, but then also kind of, you know, within crypto, how Bitcoin performed relative to Ethereum versus other indices and that type of thing.
Yeah, well, again, as I touched briefly, it's quite an interesting behavior of crypto prices in 2023, especially Bitcoin, but not only Bitcoin, right? Ethereum performed really well as well, especially compared to other asset classes. And as I said, you know, the first quarter of the year was mostly related to macro things turning slightly positive, investors becoming a little risk on. Not a lot though, but you know, we see all over the news that this is the most hated bull market in years because people weren't allocated sufficiently for this very strong performance of risky asset, pushed a lot by the AI narrative that picked up with NVIDIA and ChatGPTs and the large language model that drove, you know, the big 7 companies, the big major tech companies that drove, you know, Nasdaq prices up a lot. And crypto, you know, as its technology, it was it was also following this type of performance, right? But then what's interesting to highlight is that, you know, again, especially for Bitcoin, is that it reacted in the first quarter due to better conditions, macro conditions, and better liquidity on the margin. In the second quarter, the beginning of the second quarter, it reacted to a potentially bad news, which was the banking crisis in the US led by Silvergate Bank, Silicon Valley, then First Republican Bank. In Europe as well, with Credit Suisse, the largest Swiss bank, having trouble and having to merge with its major rival UBS. But the market saw, along with gold, but gold performed much less, that, you know, Bitcoin is no one's liability, right? It's an asset on its own, and it could be considered, you know, a safe haven. Now, I think, you know, this is the big bet that, you know, us hashtags is making, is that, you know, society will understand that Bitcoin is a supra, you know, it's a bigger thing than any other class that there has ever existed, because it's no one's a liability, right? And it's got this computational how can I say it? It's got a guarantee provided to the public, regardless, that there will only be 21 million Bitcoins, that you can only spend, you cannot double spend it, and if it's yours, right? So this is something that society will understand over time. This is the big bet that we think it implies in buying Bitcoin at this current stage of development. But then, so you have the first quarter with this behavior reacting to positive news. second quarter, the beginning of the second quarter, reacting to bad news because of, the Fed had to act because of all this banking crisis that I mentioned. And then in early July, reacting positively again to major news of institutional adoption. So it's quite interesting to see Bitcoin, especially Bitcoin, reacting to a diverse set of scenarios, right? Ethereum is also, as Yuri was mentioning, was under a major upgrade, which was the Shanghai. It went really well. It allows now people to unstake their ether and people to stake. So it's more easily to transact in relation to staking, and this is increasing security for the network, and there's yield now, and we think going forward is such a strong bet as Bitcoin. But it was quite the semester to watch crypto prices compared to other asset classes worldwide, Jerry. I found it interesting. I found it quite entertaining to watch react to different scenarios.
Yeah, and I realized that the last question that I have here is kind of the $1 million question. I think it piggybacks off your comments there. Is where do we see prices going in the next, say, year and a half, and do we think whether specific to Bitcoin or other the crypto asset market more broadly, has what happened last week impacted our views on whether or not crypto is trading at fair value now?
Yeah, not at all, Jerry. I think we have as strong as view as possible in terms of the promises of the technology. What we have now is cheaper prices, really, and it's a better entry point in my view. And it's backed by a little bit of what we just talked about, and we put out this report called "Secular Against Cyclical Forces" that list these arguments, and again, we are the secular trend is there, the technology is evolving, both the store of value narrative, which is mostly focused on Bitcoin, but also the smart contract capabilities that are most related to Ethereum, right? Once you look at what these smart contract platforms are capable of, and Yuri just mentioned, you could have a new face for social media, for instance, right? You could have a new face for decentralized finance, all backed by new intermediaries, which are contracts, right? Which are smart contracts or pieces of code, right? And this is global. It's not related to one specific country, one specific region, and it's the internet, right? So when we see that the technology is evolving, the institutional adoption is evolving, it couldn't be better. When we've been following this for quite some time, Hashtags is positioned in several countries. We're looking at it very closely, and from the institutional adoption, it's happening at a very fast pace, both for investors, but also from operational companies like the big companies of the world are all involved. So when you look at that, and then you look at prices, and I don't know what's going to happen in the next 6 months. Nobody knows. But long term, we think the forces are there to increase adoption. If adoption increases, and we're seeing in every single angle that we look, prices are going to go up because that's how these things are priced. They're based on adoption. So we're very, very optimistic. We couldn't be more optimistic. If we didn't have all this news, it would be a different story. Those are technologies that are not being used, and they're going to be empty networks and whatever. But it's not the case, right? Especially for the big ones. And I'm an advocate for the side of the argument that they're going to be a very few, very large protocols, right? And Bitcoin and Ethereum are the biggest candidates, and a bunch of smaller ones, right? So in that sense, I think we couldn't be more optimistic about where these things are starting. And then you add on top of that the fact that we have the Bitcoin halving, which is this phenomenon embedded in the code of the Bitcoin protocol. Roughly every 4 years, the issuance of new tokens by the network is divided by 2, right? Historically, it has been a very impactful price mover, right? So we expect the same, although, you know, the markets are a little bigger, people are aware of this phenomenon, but still we think it's something that is going to coincide with markets improving, macro adoption, ETFs being approved at the same time, because it's expected to happen in the same window, probably March, April, May next year. So we're going to have, you know, this flux of information at the same time next year. So again, I'm just reinforcing here the message that we're very, very optimistic for the next months for crypto.
Great, and I'm looking at the questions we've gotten so far, and there's a bunch around the spot Bitcoin ETF, and the potential for that in the US, which I guess isn't surprising, because I think over the last couple of weeks, Bitcoin ETF has been one of the top, if not at one point the top trending topic on Twitter or on X, whatever we're supposed to call it now. But so let me try to consolidate a couple of these similar questions into one. But the question is basically around the impact that a spot Bitcoin ETF would have on the market in the US, and then kind of the second part to that is what our expectations are with regards to the SEC making a decision about this now that BlackRock has entered the conversation.
Yeah, well, I'll try to answer as much as possible, but we hashtags we are involved in we have ourselves an ETF application in the US, so we just can't comment a lot, but not to have, you know, this question unanswered. We think it's the major, one of the biggest events crypto could ever see. Again, right, when we have this caliber of institutions applying, it's not, you know, it's not talk anymore. It's not the talk phase anymore. Now it's the application phase anymore. It's going to require the SEC to respond. If it responds positively, it's going to have to list the product. The products are going to be available in their shelf. They're going to have to put that, you know, allocation on their suggested allocation for their clients. The clients are going to react, and that's going to drive flows and adoption, and adoption drives the prices up. Remember, Bitcoin, there's only 21 million, right? And there will ever only be 21 million. And the more demand there is, the higher the price will go, right? So but now it's a process, right? Several companies applied, including ourselves. We already had a future ETF that is going to be potentially converted to spot. You know, and I saw one of the questions here is regarding the surveillance agreement between BlackRock and Coinbase, and this same surveillance agreement has been signed by other applications as well, and it's one of the differentiators that didn't have in the previous filings, right? So we hope this is something that is going to address the issues of the SEC, but there are other issues related to custody, market, you know, manipulation, price formation, relevancy of volumes traded in the US versus other countries. But it's a complex application. But we think, you know, BlackRock and Fidelity's and ARK and VanEck and all these big players that are long, you know, institutional players in the ETF space wouldn't apply if they didn't see a possibility of getting approved. When is it going to happen? It depends, but, you know, we think it's more towards next year. But again, this is a very fluid environment, and it could change. But there are several aspects, but the fact that these big players applied this is the big news, right? It shifted from narrative to fact, and now it's a matter of process by the SEC, and I think the weight of BlackRock is gonna make a difference here. So, but overall, this is how we see it in terms of the SEC, and again, and there will only be 21 billion Bitcoin, and now we're entering. That's the message that we're trying to convey here. Crypto is entering this new phase, right? It takes time. Technology adoption takes time. but it's happening, and this is the institutional phase now, right? And it's much bigger than the retail phase, I guarantee you. So when we look at, a $10 trillion asset manager, just like BlackRock, whatever they decide, let's start with 0.1%. That's just way too much money, and then all the others follow, and it's been like that forever, and I think it's not going to be any different. And you can look at the comments by Larry Fink. David Rubenstein from Carlisle the other day said the same thing, and it's now just a matter of time. Okay, so we're very excited about it.
Yeah, and I think just to add 2 cents to that response regarding kind of obviously the what the SEC may or may not do is there's a lot of speculation, as Pedro was saying. I think the one thing that I think has been clear, one of the things is that the applications that are in now with regard to the SEC concerns about market manipulation, SEC hasn't really indicated that those concerns have been addressed. So that may be kind of the one key issue that will need to be addressed, going forward in order for regulators to get comfortable with this. But again, like Pedro was saying, I think the entrance of BlackRock into this discussion has changed the question from when, from being if to when it's going to happen. So I was hoping that we wouldn't go the full hour here. We have a couple more questions, and maybe there is a question around liquidity staking issues that I think, I don't know, Lucas or Yuri, if you guys want to address this, but the question is around the leverage cycle regarding staking, and if there are a lot of risks or considerable risks with leverage and staking in particular. I don't know which one of you guys wants to tackle that first, but
I can take a stab at it. And I believe that that's a very relevant question, because usually when we talk about crypto, at least in the first phase of adoption, a lot of people were seeking profits, which is completely okay. But people don't understand that when they're talking about assets with a very small market cap, or even when you're talking about extra yield, you're talking about extra risk. So when we're talking about liquid staking in the leverage cycle that we see right now with its derivatives, I often think about providers such as EigenLayer, which are tools that enable investors to earn extra yield. And I might that might be the leverage cycle that whoever made that question might be thinking about. And I just think that what we're seeing right now in a bunch of DeFi protocols, and one of the reasons why people have had bad experiences with crypto was just the lack of understanding that whenever you're trying to get these extra yields, you're also incurring an extra risk. So if he's asking if the risk is considerable, well, it is. And right now, as far as I know, at least, EigenLayer or these yield optimizers for liquid staking derivatives, they haven't been exploited yet, but they 100% can be in the future. So we do analyze metrics and measurements as far as using stake ETH as collateral, and but just at the end of the day, whenever you're using a synthetic or you're trying to use any sort of mechanism or tool in order to add a layer of yield, you're incurring in new risks. You're incurring in extra risk. I think that's the only thing that investors should care about. That's not something that is reflected on our products. That's not something that we give exposure to. But when we're thinking about the overall health of crypto, there are a lot of initiatives that last year were clean out of the market. And I feel like this is perhaps one of the few that haven't been exploited yet, but it's 100% something that it comes with its fair share of risk.
Yeah, and this risk has been reduced a little bit, although the reach of these liquid staking derivatives has increased. But since the Shanghai upgrade was turned on, the ability to unstake removed a lot of the risk from the market, but the use of these liquid staking derivatives in pools and trading places is something to be aware of, because it could, this aspect of DeFi specifically called composability, if not done properly, can add new risks to the system. So, but it's a good question, technical question, but I think it has been reduced a little bit since the staking was turned on, right? But good question.
Yeah, and I know we oftentimes we'll get a mix when we have you guys on. We get a mix of the technical questions with the when is the SEC going to approve an ETF question. So appreciate your flexibility to answer that spectrum of questions. But I think I'm looking at the other questions we have right now. I think we've really discussed. There's actually a couple on volatility, and Pedro, I think you really hit on that early on. So I think maybe what we can do is we'll end it here, and I just encourage everyone that's listening to visit hashdex.com. Our insights page has a lot of research from this team and others, and we're always here as a resource for your technical and non-technical questions. We're here. So thanks again, everyone, for joining us, and look forward to having this webinar again next month. Take care.